Hello, my name is Thijs Matteau. Welcome to my presentation about our Canadian for-profit student investment company Brighter Investment. Before I tell you more about our company, I'd like to start by introducing you to Mavis. Mavis is a senior high school graduate from northern Ghana. She just graduated at the top of her class and wants to get a degree in food processing technology. If she's successful at that, it will increase her life expectancy, make it more likely that her children are educated, more likely to own a home and a pension, and her income with that degree is expected to be 5 times larger than it would have been without the degree. Compare that to a 1.5, maybe 2-time income increase from degrees in the developed world. So for Mavis, the return on investment from getting this food processing degree is clearly very, very large. However, there is a problem. Mavis' family can't afford her education. Despite the large potential return on investment, banks in developing countries don't give out student loans to the poorer families that need them. Scholarships are great, but only available for less than 3% of the student population. Government aid is insufficient, and microcredit loans are too small and for too short a period to enable Mavis to get a degree. So right now, there is no viable option for Mavis to finance her continued education. We need a solution in the top right corner that allows the many students like Mavis to pay for post-secondary education, because there are many students like Mavis. In Ghana, we estimate that 120,000 students graduate from high school every year, that have the grades, talent and ambition to get a degree and have a successful, rewarding career, but lack the needed funding. Worldwide, we estimate that every year, 60 million students in developing countries require $600 billion to be able to continue their education. So this is a large problem, but also a large opportunity. We need a solution that A, makes it possible for any talented high school graduate to pursue a degree, and B, a solution that can do this at a large scale. Our solution is to invest in the continued education of these students. We pay for their degree, and after graduation, students repay a fixed percentage of their income for a pre-agreed duration. So it's not a loan. The more successful the student, the more they repay. This way, our program can provide financing to poorer students because we focus on the future earning potential of a student instead of current non-existent credit ratings like banks do. Also, no student risks ending up with an insurmountable debt that can be 4 to 5 times their family's annual income. And because the more successful the student is, the higher our return is, we can do things like invest in mentorship and career advice to ensure that the student is successful. The solution is scalable because in time it will allow us to attract funding from traditional capital markets. Because the student's income increases 4 to 5 times with their degree, the percentage of that income that they repay provides investors with a competitive return. Risk of inflation is usually high in developing countries. If inflation is higher, however, wages go up as well. And since repayments are based on these wage levels, returns are more stable and secure than they would have been, for example, for a traditional loan model. And finally, because repayments from a single student can almost support 2 new students, you understand how the number of students supported from reinvested distributions quickly add up over time. The way this works is as follows. Students are recommended to us by their high school teacher. This allows us to go back to this teacher year after year for his most talented students. Our research has also shown that teachers are a good source of information about the student. This information is used as input for our selection algorithm that estimates the probability of career success and likelihood of repaying. Microcredit loan programs have shown that social pressure is one of the most important factors guaranteeing repayment. Since the high school teacher comes from the same community as the student, they help provide that social pressure for us. Once students are selected, money from investors is pooled and used to pay for the education of a cohort of students. Tuition fees are paid directly to the university, and students receive a monthly stipend as long as they are studying. We only support students in programs to provide good career prospects like engineering, science, law, technical diplomas, etc. Our mentor program based on alumni ensures that students reach their full potential. Once students graduate and start working, they repay a fixed percentage of their income back to us. We use this to repay the investors that supported the cohort of students. A combination of social and legal incentives coerce students to make their repayments. To be conservative, our models are based on 15% of students not repaying. Other income-dependent repayment schemes and microcredit loans have shown that 5 to 3% is very realistic. The percentage of their income that students repay and the duration for which they make these repayments depend on the earning potential of the degree. But to give you an idea, in Ghana, where we're currently operating, for a 4-year civil engineering degree, students repay for 6 years, and they repay 30% of their after-tax income as long as it's over a certain minimum threshold. This may sound like a lot, but if you remember that their degree increases their income 5 times, you realize that already during the repayment period, they're way better off. About $7,000 pays for a student getting a 4-year degree. 90% of that goes directly towards fees, stipend, and mentorship. After a cost of acquisition of $50, for Brighter Investment, it leaves a gross profit of $650 per student in the first 4 years while they're getting a degree. It's hard to predict what we'll get back from a single student. However, if we invest in a cohort of students, returns are determined by predictable average dropout rates, average unemployment rates, average salary levels, etc. We've researched income levels for different degrees in Ghana and used the Monte Carlo analysis to model the returns. We project that the average student will repay about $13,600. $12,900 of that is repaid to investors that invested in the student's cohort, and $300 is used to collect the repayments. Again, for Brighter Investment, this leaves a $400 gross profit per student during the repayment period. The resulting average annual interest rate for the students is 12%. But of course, this is higher for successful students that repay more and lower for less successful students. Investors that invest in our students, after subtracting the management fees used to pay for the operations, can expect a 9% return. We currently have 25 students supported, and because we started with a mixed cohort of first, second, third, and fourth year and vocational training students, our first students have graduated and started repaying. It's early to draw any conclusions, but so far they are performing better than we modeled. The following graphs show inflation, change in exchange rate, and salary levels in India and Ghana when converted back to US dollars. We've looked at these numbers for 28 different developing countries in the last 20 years, and because of inflation and unfavorable exchange rate developments, in a developing country, a traditional student loan would have lost 8% per year in value on average. Wage levels in US dollars, however, being the main factor that determines your student investment return, gained 5% per year on average. The volatility of these salary levels converted to US dollars was 5.4%. This makes them much more stable than the S&P 500, which showed 18.4% volatility in the same period. So with a return of 9%, that's less volatile than the stock market index. With a track record, Brighter Investment should be able to compete on traditional capital markets. On impact, our model can also easily compete with existing models. A $100,000 donation to a scholarship organization will support approximately 13 students in Ghana. An investment in Brighter Investment, invested and distributions paid out, will support the same 13 students, but will provide you with $159,000 to invest in or donate to something else. Investing the same $100,000 but reinvesting your distributions with us for 12 years, you will support 45 students, and you will have $408,000 that you can spend in any way you like. The team currently consists of myself, with experience in starting and financing real estate and public-private partnership projects, Richard, with experience in education in Ghana, and Bruno, who is a data analyst and researches salary levels and trends. We also have 6 experienced mentors and advisors. We're part of this year's GSBI cohort and are supported by the Center for Social Innovation and Impact Investment at the Business School of the University in Vancouver. Right now, we're raising money to support 70 new students starting this September. This investment takes the form of a subordinated variable payment debt obligation. Because this investment goes towards a cohort of first, second, third, and fourth year students, you will start to see repayments from the first graduated students within 2 years. Based on predictable wage levels, predictable employment figures, dropout rates, exchange rates, and historic fluctuations in these numbers, we predict a 9% return with a 95% confidence interval between 4 and 13%. Since we have received many more student applications than we can fund at the moment, if you're interested or you know someone potentially interested, please contact me for the Investor Information Memorandum with more information about this investment. After our next cohort of students starts their education, we are looking to grow our company. That means we'll be raising $100,000. Combined with a max $50,000 loan from the Canadian Business Development Bank and a Canadian subsidy that will pay 70% of our developer salaries, we will use this investment to raise another $560,000 for students, recruit 325 new students, improve our mentor program, and further automate certain key processes so we can handle these larger student numbers efficiently. This conservative projection shows how easily we can reach a sustainable scale in Ghana at 390 new students per year. The potential of this model goes way beyond Ghana though, so contact us if you're interested in our more ambitious growth projections. Current higher education financing models are failing, and this market is ready for a revolutionary disruption. We believe in a future where every talented student has the opportunity to reach their full potential, where merit is more important than money. At Brighter Investment, we're making that a reality. And you can be part of it. If you're interested in investing in our students for a competitive return and amazing social impact, email me or visit our website to download our Investor Information Memorandum. If you believe you can help us achieve our growth ambitions with either advice, contacts, and/or capital, we'd love to hear from you. Thank you for watching.